All right. Good morning, everyone. Sorry for being very late. Just kind of getting through setup here, but have a little fun coming back from Chart Summit. Breckenridge was fun. Those of you who were there, great to see you. This is the Wednesday webinar. I am Todd Gordon. It is February 27th, and let's see. Let's get into some markets here. Let me get the comments up. Few formatting issues that just don't seem to be corrected, don't seem to want to work. So we're going to roll with it. But all right. So guys, just throw some comments in there. Let me know that the stream is working, the sound is okay, and we will get rolling. Okay. So we made some pretty good moves, I hope, in the market yesterday and the day before. So let me just get these comments up here and we'll take you through what's happening. Terry, I see, or team, I also see Slack. So if there's any issues in there, just throw them in and we'll jump in there. It looks like everything's working except for the comments, which will be addressed next time. Okay. All right, guys. Good morning. Okay, volume is good. Okay, so as I said, we were in Breckenridge in Colorado for the 2019 Chart Summit, which was fun. My friends JC Peretz and Brian Shannon put it on. It was good. It was a combination of skiing and in the day, and then speeches at night. It was great. There was about maybe 12 speakers there, so it was quite an event. I'll show you a few pictures. We're skiing with my buddy John Nigerian from CNBC, and we had some good snow, a lot of camaraderie, so it was enjoyable. I believe they're going to do it again next year, so definitely take a look if you want to hop in there. Let's see, couple pictures for you, get caught up. There's JC and Brian. There's me, Nigerian, Brian Shannon. It was a good time. We actually took this cat up about to the top of the mountain, went backcountry skiing, which was very fun, and got some good powder runs. Those of you who follow me on Twitter might have seen these couple pictures in there. I had a race with JC, which was fun. We were kind of racing for the bar-bill, and it's not really a fair fight because I skied in college and JC was a Division I baseball player, so I had to give him a couple second handicap, and I think I overcame it. But it was really well done. Again, if you guys want to join next year, certainly look out for information there. So we got back Wednesday night, and no, not Wednesday night. It is Wednesday. We got back Sunday night, and just getting settling back in here. So all's well. Markets are moving up into resistance, and kind of what we talked about last week, 2 weeks ago, I should say. We missed last week because of that event. Is starting to happen. Okay, it's starting to happen. The thing that I've been kind of talking about the most here is just this highly visible area of resistance that's been acting like a magnet. The last Wednesday was 213, which was right here. Okay, so it's amazing. That's been 2 weeks of trading, which is amazing. 2752, and we're 40 points higher now. Okay, fine. Like, you're probably as tired of hearing about this as I am saying it, but there's just a whole wealth of resistance, highly visible resistance that's coming into this 2800 to 2820. The first one I've removed, I'll throw it back in there for you, is the 200 EMA. So 200 exponential should be 2701, which is interesting. Ad study. Let me go SMA. The 200 SMA, we'll make that blue, is above at 27.48. So we're actually through it. That's pretty key right there. So we're through that. On top of that, we've got this old triple top, which, okay, fine. We're coming back to test for a fourth time, which I find very interesting. The third factor is we have round number 2800 coming in. So we've got three very visible technical levels. I think this is going to be very tricky to trade. I've been approaching that this way with our clients. Anybody who's ever picked up a book on technical analysis is going to be watching the zone. And I've talked about this probably 2 or 3 times on CNBC, probably 30 times with our members. So this is 31. On top of that, you have the 78% retracement on a log scale of the drop from September down. Okay, so there's a lot happening here. As you start to break down and start to bring in some Elliott, here's the preferred count for me as it stands now. Okay, I am of the belief, let me get off the daily up to the weekly, that some kind of fourth wave is happening. Okay, some kind of fourth wave. It could be a triangle. It could be the remnants of a flat from here. But let's go under the assumption that it is a triangle. We're going to make one more move. Then we have a big drop to come. This is the monthly down to the weekly. Here's that same zone of resistance, 2800 to 2820. From the weekly, got it, down to the daily. We covered that. If this is a triangle and we're in fact running up in B, then I'm thinking that we might have a B wave correction to come. So we're not looking for anything crazy here, guys. We're not looking for an all-out destruction. We're just looking for a minor pullback around 2580. Of course, that's going to be 300 to 250 points, so pretty significant. All right. If this is an ABC, you can actually just disregard everything outside of orange circle A and orange circle B and just say, listen, it's a 5-wave zigzag. I should say it's a 3-wave zigzag with 5 waves in A and C and 3 waves in B. Okay. So the question on the table is, within the 5-wave move, which again, let me just go over here and let me just do a quick little review for you. A zigzag is the most basic technical pattern in the world. Okay, it's the most basic 3-wave correction. It couldn't get any simpler. It's the least amount of legs possible that still has progress. Okay, when you have a 3-wave move within the context of the Elliott wave theory like this, in the shape of a zigzag, which you go up in 5, you do a retracement to a higher low, which anywhere from a 38 to a 78% retracement is key. So you go 5 up, you go 3 down, then you expect 5 more waves. Okay, pretty simple. So as of now, I think in the zigzag, and you go to the mall, the "you are here" map is right there, which means this is what we're expecting, followed by one more 3-wave move. So as we go back to price, this should look a little bit more comfortable now. Here's your 5-wave move. Within each of our trend waves, which are 1, 3, and 5, they themselves, as we get off the daily, in order to kind of hone our accuracy, they themselves must be 5-wave moves. This is a 195-minute chart, which is a half-day chart. All right. We don't have the detail that we quite need to see. But what I do see is green 5 here that we just looked at does break down into 5 smaller waves. Off the 195, we're working those time frames. We're getting down. Okay, there's the 5-wave move inside of green 5. All right, there's orange 5. This is something I was talking about with the members yesterday. I don't love how this looks to be a 3. So we might need to adjust that a little bit. It's a little dicey in terms of calling that a 5-wave move. But regardless, we've started up on a weekly, went down to the daily, went down to the 195. Now we're in the 30-minute. We even get down to the 15-minute chart and you say, all right, you could squeeze a 1, 2, 3, 4, 5. But I think the fact remains that the last 2 days from this zone that I've approached very carefully, and I can't tell you how many times I've said this with my members, I take the job of shorting a 15% move in the stock market over the course of a couple weeks. Well, it's 2 months already. Very seriously. All right. This is how you start to build into counter trend trading with Elliott, which is very, very important. We have 5 waves down right here. Okay. You can go 1, 2, 3, 4, 5. You could even interpret it another way if you like. You could say 1, 2, 3, 4, 5. And then this is some kind of flat. Either way, the implications are for lower. So I'm sharing with you guys basically because I just came back from a long trip, beat our 4-month-old baby Eden is not sleeping at all. I love her to pieces, but please go to bed. I'm not as prepared as I should be for this. So I'm just telling you exactly what we're doing in the membership. So I hope you guys appreciate that. So basically what we did is we've reduced the long exposure we have in our equity portfolio. And I'll show you that exact portfolio. What we've done with the members, this is my long stock portfolio. Transaction that we've done recently in light of this move, were to lighten up an Apple, Disney, close Kronos, lighten up in Tesla, and close Morgan Stanley. We've even initiated shorts on the 2X side. This is our equity portfolio. All right. So right now I am roughly 45,000 in long equity exposure. So I'm only 45% long this market. I'm about $17,000 worth of a $100,000 portfolio in terms of short exposure. And the balance is cash, 42,000 in cash. So what we're doing is we're actually managing a long only equity portfolio. And here it is, right here. All right, I can show you the numbers. Portfolio is worth about 104,400. We started with 100,000 3 months ago. Cash on hand, those are the exact positions, et cetera, et cetera. Okay, so what we're doing here is we're actually using our shorter term option account to hedge and gain exposure on the equity portfolio. So the new trade that we put in with our members yesterday was a pretty aggressive short in the SPX. Okay. And I'll stop talking here in a second and start to look at some questions. So I just want to get through this and just show you where we're at. So here's the exact trade that we put on. Okay. Here's the exact trade that we put on. This was done yesterday. Okay, so view trades. This was done on 225. This was done 2 days ago, excuse me. 225. We have a unbalanced butterfly. So I did 4 of the 2750 puts in the 29 March. I did 6 of the 2700 puts and 2 of the 2650s. So long 4, short 6, long 2. And what that does is gives you a negative delta expression. So I'm carrying minus 30 delta. So it's basically $30 a point in the S&P, slightly negative. Okay. Slightly negative theta and 109 Vega. We basically want this move to happen over the next month and get down towards about the 2,700 area. Okay, 2,700 would give me a profit of $16,000, $17,000, $15,000. The total cost of the trade was $2,400. I'm roughly going to risk about half. I only have a half size position on now, so I have about $1,200 of risk in here. For this size account that I trade for my members, On this particular trade, I'd like to risk 2,000 to 3,000 and try to make, if we could hit a pin at 2,700, probably 30 grand. That'd be ideal. Now, why did I set this up like this? If you have more puts on the upper strike, you have more negative delta. The higher the delta, the higher the strike of the put that you're trading, the more negative the delta. So let me say it again. The higher the strike, 2750 as compared to 2700 as compared to 2650. If I have more puts on the higher price or the higher strike, that's going to give me more negative delta, which makes it more of a bearish trade. It's still long 6, short 6, but I've taken 2 from down here, put them up there. And that gives you this kind of trade. It's a nice way to be bearish. It's not so directional, just buying puts or buying a put spread. It really minimizes the theta, which is time. And why would I do that? Because it's the context that Elliott wave gives you, which is I'm just looking for a B wave drop. It's not, I don't think this is going to be the end of the world. We could just kind of meander down and look at the right scale. See 2,700? It'd be perfect. See the x-axis? 2,700 would be perfect. See the y-axis? If it could happen here, if we could be right here at the crosshairs, that would be payday for us. That's all we need. That's all we need. Now, where do we manage the risk? Okay, where do I manage the risk? For me, if we start getting above 2850 in the S&P, I'm risking roughly 55 S&P points. I'm going to start to manage the trade and get out. Okay. So that's that. Let me take a look at questions again. I know our social media queue isn't working. Apologize for that. So let me see. Was Dr. J able to keep up with you with skiing? He is a machine. I won't say his age. He was a little, I hope he never hears this. He was about 5 years older than I thought he was. And he could kick my butt even more than I thought he would be able to. In terms of like muscle skiing, no, but he is an athlete. It's amazing how much he can hammer down. It was really fun to ski with him. We got some good video. I have the footage I'll put together in a vlog. I brought a GoPro, brought a drone. All the guys were taking care of stuff. Or taking video. It was good. Oleg, hey Todd, glad to see you again, dear sir. Oh, very nice. CME options for S&P have sellers around the 28 level. But most exciting, there's a 1,252 million of buyers sitting in the monthly balance 26.25. Okay, interesting. That'd be fine. Zachary, possible for expanding ending diagonal? It could be. It's a little funky. I think you're talking about up here. Or no, perhaps just inside of orange 5. Probably not. I mean, I could work this a little bit, but when you get down on a 5 or 10 minute chart, it doesn't matter all that much. Okay. You could squeeze a 5 wave move out of that. I mean, well, 1, 2. The risk is 1, 2, 1, 2, 3, 4, 5 of higher 3. So this 3, 4 matches up with this. And that would mean we have one more push to go. And as I said, 2850 is where I'm going to start to manage it. At this point, you're really splitting hairs here. Good morning. Use your videos to learn Elliott wave. Awesome. TS, given there's a decent probability that a new bull wave has begun from December 24th, when do you shave the beard? I came back really hairy from Colorado, so I actually knocked it back. Yesterday. And here's the bull count. Okay, here's the bull count that this is just either this is C of a bigger flat or a complex, or it's just an ABC. Doesn't matter. the fact remains, guys, even if we are in a new bull trend, the whole conversation you and I just had stands. And this is what people don't understand. And before I go on a little rant, everything prior to December 25th doesn't matter at this point and for purposes of our trades, because I firmly believe this is a 5 and you're going to get a drop. I'm playing it as a B. If I'm wrong and it sells off in a 2, okay, I'll have an extra 20, 25 grand in cash and I'll be wrong. That's okay. And that's what people don't understand and love to hate about Elliott, is because it is a little complicated and there is no formulaic approach to say, sorry for my production here. That's poor quality. There's no formulaic approach and say, here's exactly what the wave count is. Like I always say to my members, if you believe you can buy a life plan off the internet and follow these steps, and you're going to have the hottest wife and the smartest kids and the best house, and you're going to have all kinds of capital at your disposal. Sorry, I don't think you quite realize how tough life is and how much you just got to get kicked in the pants, right? So Elliott is a wonderful way to kind of feel your way through the jungle and play out multiple different possibilities. Okay. So that's that, guys. Tell you what, my wife's supposed to be home. I got to let this guy in. Oh, she's there. Perfect. So I love Elliott in that it's not formulaic and that it's not saying, okay, well, here's what it must be. And you say, well, you have to change the count. Oh man, that proves the theory to be useless. Again, show me a style of analysis that is not subjective, that does not require for you to go through a decision-making process and a model and look at multiple possibilities. In fact, the subjectivity of it is why I love it so much. And I won't come in and I'm not even reading most comments and I'm picking through. I haven't seen too many haters, but I don't like it when someone comes in and says, oh, this is wrong. Here's what the count is. Yeah, I've been doing this for 20 years and I was selected by the largest Elliott Wave organization in the world to represent them. And I wouldn't come in and say your count is wrong unless it breaks a glaring rule. I'd love to know what you think. And I welcome a different perspective. And I think that's just kind of the mentality you have to have as a trader. If you come in and try to tell this hugely powerful force with billions and trillions of dollars pushing it around that you know what's going on and everyone else must fall in line with you, you're going to get run over. Okay. Rant over. So we got futures down here again, which is looking good. I am going to guard against the potential that we have one more push up, and that this is not a 5 back on the 10-minute chart. I don't think so, though. I mean, this is getting, if you start breaking through 2780 area, that's pretty much good night. I'm going to add the rest of my position with the members. A couple other things that I want to mention. Bonds are looking spicy up here. We had a really good trade, and I shared this with you guys. We had that TLT butterfly that needed to stick around like the 122 level. We got paid on that. We didn't get max profit, but with like $500-600 of risk, we made $2,500 on it. And that was shared with you live public. So you could have participated in that trade if you wanted. Bonds are super quiet here. Some kind of funky, crazy triangle in here. Looks like they're ready to move up. That's going to also contribute to kind of the risk off mood that I'm presenting here. So just kind of a sideways triangle here, looking to press higher. Transports, I think, are weak. XTN was quite weak yesterday. XLK technology is not really participating as much as it should on the upside. We just go over and do the NASDAQ. It's not quite, this is something that I mentioned with my members. It's not quite at a 786 retracement from the September-October drop. So tech is actually underperforming a little bit here. It's not as strong as the S&P is. So starting to move up. As I said, I scaled back on some of my long Apple holdings. All right, questions. See what else you guys. Good rant. Thanks, Susan. As Terry says, if you want a daily dose and usually got a better voice, yeah, check us out. We're at tradinganalysis.com. We have a new app coming out for all members. You get notified via the app. You get the videos, the chart room, everything on the app. This is the live streaming show that you're on. So check us out at tradinganalysis.com. I am free membership. I think you got to go in. I don't know how you take a free trial, to be honest with you. Services right there. Tradinganalysis.com/services. Look how nice that new trade looks. So there's the trial right there. What other questions? Crude oil. Yeah, let's take a look. Forex. We have full service of foreign exchange, crypto. Crypto's been moving again pretty well. We've had some good trades in the Forex service as well. Jamie, great question. I actually talked to Tony at Motive Wave yesterday, and he told me about the beta. I've been out of touch up in the thin air, thin oxygen of Colorado, and and he just told me about Motive Wave 6. So I'm gonna update it, and I'll jump in today. And I think he wants some of my power users to have a go and give them some feedback. So yeah, I'll be updating today to 6. Here's a funny aside. I've done probably, I don't know, 200-300 presentations in my life, whatever. I love speaking in front of people. Doesn't bother me. In Colorado at altitude, Breckenridge at its base is 9,600 feet. Like right now, I got an altitude app. Right now, I bet I'm at 295 feet. It's really hard to do presentations at altitude. It's crazy. Like my heart was going so fast. It was like the first time I gave a speech. I'm just telling you, whatever. It was crazy. I've never given a speech at altitude. It really tripped me up. And a couple other presenters said the same thing. Like I have no problem speaking in front of a room, but I was like, anyways, for whatever that's worth. So yeah, I will jump in. Crude, I don't have a strong feeling on crude. I think you can make a 5-wave motive impulse decline out of that. Always want to make sure wave 3 has 5 smaller waves, which it certainly does. We're doing A, some kind of B there, I would say, and then a little move up. The 200-day, this must be the exponential. That's the simple. 200 simple is at 62.90, 50% retracement, 61% retracement. You're coming into a zone here in crude. So that actually, I'm glad you brought that up. That's actually looking a little bearish to me. That's going to confirm my my position on the stock side. So I'd say while below 63.80, I think crude is a go on the downside. Gold, I have no idea. I don't know what gold is doing. It's still, it can't seem to break out above this triangle. This triangle that I've been following for years, 2 or 3 years, is still valid. While we're below 1375, the triangle is still valid. Alex and Terry, who run our Forex side, tracks it very closely. He is tracking as a possible A, flat B, and then we're moving up in C. And that's entirely possible. Until we get above these 1370 highs, I don't have much to do with gold. I don't have a big opinion in gold, unfortunately. Oh, shit. Sorry, there we go. Let me just go back over that. So here's the first one that I was talking about. So this is my traditional triangle that I've been tracking for a couple of years. While we're below 1370, I still got to hold to this, that we might drop If the dollar does want to, if the Fed finally starts to commit to the rate hikes, and who knows, and maybe the market will force the Fed to raise rates, who knows? While we're below 1370, still got to stick with it. This is the bullish count that Alex did come up with, which in fact interprets this not as a triangle, but then kind of an irregular ABC, and we're doing this. That takes us to 1370, entirely possible. I do think we're due for a wave for a pullback like this. And that would be a nice little buying opportunity just to take you up to that decision point at 1370, but not a strong opinion on gold. But that's what I'm tracking right there. Pull back in 4 to 1303, stop at around 1275, take profit 1360 to 70. Good question there, Alessandra. Hi, Todd. If one came late and wanted to build your long-term portfolio, maybe it's better to wait for the first part of the correction we're starting to buy. Yeah, that's a tough part. I'm trying to do something with this portfolio where I'm just, here's my account. I just, it's not built to say, well, mimic my trades, because that's how my options account is built, where you can kind of size according to your position, and every trade is viewed differently. This one, there's no way to do it. Unfortunately, you can start to scale in. Obviously, you're not going to have the same entries as I do, because this thing's a living, breathing thing. It builds and we adjust. And I think that the takeaway is, you see how much money I've got allocated to the long side versus the short side versus cash. And I think that's the important thing. I'm only 45% long this market. I'm 18% short and the balance cash. So that might help you, but it's a really good question that you bring up. And obviously I'm adding and subtracting all the time and adding positions, so you can certainly build those. But it's basically down the line to go down the money management side, which is something I wanted to do for years. I know that doesn't help. All right, guys, we're going to leave it there. Thanks for listening. Sorry for being a couple minutes late. At some point, I'll figure this out. I'm giving myself 2019 to figure it out. So, guys, check us out, tradinganalysis.com. We have stock, options, Forex, and crypto. All right. Appreciate it. And I will see you guys. Also, be sure to hit thumbs up if you watch to the end. Thumbs up, comment, questions, insult, everything. And thank you very much. See you guys.